the chain agnostic.
Okay. And what are the differences?
So Maker is only limited to Ethereum. So, but if whenever you are chain agnostic, so for example, on Maker you can only deposit some type of coins or assets to mint stablecoin DAI. For example, ERC20 token. But for chain agnostic system, if you have other assets, for example, you're holding assets from IOST, you're holding assets from ontology. So how would you mint DAI in that way, right? So you need a chain agnostic system. So you holding that assets, you use Bidao platform, you deposit your assets, you create a CDP, and then you can easily mint buy.
Very cool, very cool. When do we get to see your project going live, do you think?
Our testnet will live soon, pretty much maybe within 1 or 2 months. But our mainnet, let's say to be safe, maybe by the end of this year, we're going to be live. And so that people can enjoy the chain agnostic system, they can mint stable coins using their assets from different chains. Yeah.
Nice. All right, let's move on to Piers. Maybe, so Piers, from what I understand, you guys are tackling the scalability issue. Is that correct?
So, I mean, there's more than just the scalability issue at play in DeFi. I think that's the most painful thing that we're seeing right now, right? Which is the price of gas is sort of peaking on Ethereum at 500 GWay and higher, and this is meaning that like people can't get in and out of positions, people are finding it difficult to trade, and a lot of people are complaining about Ethereum being essentially a whale only chain. That issue is sort of very keenly felt, and scalability is certainly front of mind and something that Radix was sort of founded back in 2013 to solve and fundamentally research. But for DeFi, there's more than just scalability at play here. Like the DeForce hack, where there was like $50 million, $25 million sort of disappeared overnight. The Yam.finance, where $650 million flowed in and then flowed out straight away due to bugs. This is all due to how we're building on top of these platforms as well. So Solidity and the Solidity VM and its lack of suitability for building DeFi applications is also a real issue that we sort of paper over a lot of the time because we're excited about how the momentum is driving, but a lot of times that's leading to developers to have and projects to have to make this horrible choice of like ship it quickly and then maybe there's bugs, or like ship it slowly and take a very long time and maybe miss the market opportunity. So I think that scalability is something that Radix was built to solve, and something that we've sort of spent a long time working out how you can do this from the point of view of not just user to user scalability, not just user to application scalability, but application to application scalability. Because fundamentally for DeFi, the thing that's causing product market fit, the thing that is causing value to be flowing into the DeFi ecosystem is the fact that you can compose together multiple DeFi applications, right? So I can go from Uniswap into Compound, I can go from Compound and Synthetics, and I can compose them all together. So I can be like, right, I don't want to do this like loop from Aave to Uniswap back to Aave unless I can do all three components of this, and I can do two sides of the trade. And that was the start of things like flash loans and stuff like that, and all of that beautiful, very important infrastructure in terms of functionality is what we call atomic composability. And this is the ability to be able to call multiple applications at the same time and move money between them. That's what's causing the majority of the congestion on top of public networks at the moment. That's what our consensus algorithm Cerberus was built to scale to sort of billions of users, but at the same time that's also what Ethereum 2.0 doesn't solve. It's what Polkadot doesn't solve, it's what Cosmos doesn't solve, it's what Near doesn't solve, it's Avalanche doesn't solve, fundamentally because everyone is building sharding based on the problem that we had in 2017 when CryptoKitties was around, which was user to application scalability, not application to application scalability. So that's a fundamental thing that we built Radix for, but also these ideas of building more securely, being able to build more quickly, and also looking really deeply at how you get self-incentivizing ecosystems, because fundamentally a public ledger is all about the community that surrounds it. And you look at the difference between Ethereum, which raised $18 million in their crowd sale sort of back in 2014, 2015, and then EOS, which raised 7 billion or something crazy like that, spent $2 billion on trying to attract developers to its ecosystem and failed, where Ethereum has kind of built this very, very grassroots movement. And this all comes into sort of the incentives for the individual, not just for the projects, and sort of how you create that sort of underlying grassroots ecosystem around the things that you want to build. Radix has a great advantage in that, because we've gone, right, we believe that public ledger, the killer application for public ledgers, is decentralized finance. It's not lots of things. It's one particular very broad industry segment. And so if you incentivize a community of developers and builders to build tools and applications around that particular deep and broad financial area of finance, you suddenly are able to build a much quicker, much more vibrant ecosystem around that particular segment, rather than trying to sort of also do charitable giving and also do social media and all these other things that a lot of the general purpose ledgers out there are kind of broadening themselves for.
So one question that comes to mind is if tomorrow someone builds a DeFi project on Radix, will it be interoperable with other DeFi projects on Ethereum?
Yeah, sure. So like this is this is key, especially the Ethereum to Radix bridge. So there's a number of ways in which you can build ecosystems closer together. The first level is at the easiest one is things like wrapping services, right? So being able to wrap assets from one ledger and represent them on another. And we've already partnered with people like Copper Custody, who will be providing institutional wrapping services to bring across 137 of the different top crypto assets across to Radix. So you'll have Bitcoin on Radix, you have ETH on Radix, you have Polkadot on Radix, you have all of these other assets on Radix almost immediately. This allows you to use these assets within our ecosystem. We've also been very careful about building two-way bridges between Ethereum and Radix, so that people can easily move tokens between both places and allow them to access assets and services in both places. And we've also started to work with projects that provide this way of doing cross-ledger functionality that unlocks liquidity. A good example of this is the Skunkworks project that we recently announced, Stakehound, which is unlocking $25 billion of locked liquidity and staking on all of these different ledgers, from Cosmos to Ethereum when it comes live. And this allows you to also move that unlocked liquidity between the Ethereum ecosystem and the Radix ecosystem. And then working with projects like Bidao and cross-ledger stable coins are also really exciting opportunities for us to be able to allow liquidity and assets to move between ecosystems. Lastly, there's the trustless bridges, the sort of the full transparent ways of moving things across, that you don't have to trust a single custodian, and that's why we're working with people like the Ren Alliance to be able to bring trustless bridges between the Ethereum ecosystem and the Radix ecosystem, as well as the other crypto platforms out there.
Great, thank you.
So Radix is a very innovative layer one solution. Hopefully it's gonna be a killer, layer one solution for the DeFi, system. Like it has lots of new innovations. So I'm just curious about the structure of the Radix. So I read some research paper about those. So it seems like we are using a completely new concept or infrastructure. It's called Temple, so it's different from block lattice and traditional blockchains. So could you please?
Sure, you're talking about the consensus layer itself. Yeah. So the way that consensus is constructed, we've actually upgraded from Tempo to something called Cerberus, which we've just released our research paper with UC Davis on how that works. And this is a concept that allows. So it's not a blockchain. You don't have a chain of blocks, and you don't have things like a parachain and or a relay chain, which is often what's done when you create sharding in decentralized ledgers. Instead, you have a set number of shards. It's actually a very large number of shards, 18.4 quintillion, and these shards are automatically ordering data. So if you have a transaction from a wallet, your wallet is mapped to a shard, which means that all of the transactions that relate to your wallet live on that shard, which this basically means that you end up getting, you're grouping together related events and you're ungrouping unrelated events. And the advantage of this means that you can have parallel consensus. So if I'm spending from shard 5 to shard 20 and you're spending from shard 50 to shard 100, then we know for a fact that those transactions are not related. So they don't need to be part of the same consensus event. And as a result of that, you are able to massively parallelize the ledger and what's going on. However, the magic of Radix really comes in when you need to actually braid together multiple shards. So the consensus mechanism, Cerberus, allows you to call multiple shards at the same time and have all of the nodes that service those shards come to consensus at the same time on that event, which is how you can have things like, a Uniswap on one shard and a lending application on another shard, and still be able to get synchronicity between both of those on ledgers like Cosmos or on things like that, or Polkadot or Ethereum. Then you end up getting, you end up actually having to wait for the parachain. So I have to complete locally, wait for the transaction to appear on the parachain, and then complete on the other shard. And it's only once those three areas have been synchronized, which can take multiple blocks, can you actually come to a result, which creates all these problems with composability of DeFi applications. Whereas Cerberus, what Cerberus does is it allows you to make sure that you're ungrouping unrelated transactions, grouping related transactions, and then allowing those transactions to be combined across shards simultaneously to be able to still save DeFi composability.
Yeah, very impressive.
Yeah, very nice. So let's talk about maybe what you would be apart from your own projects, what are some topics you're very excited about within DeFi?
I'm super excited still about stablecoins. I think that the stable store of value is one of these sort of like humanity's greatest challenges. At the moment, we peg to the dollar because the dollar is the international sort of settlement currency. I think that what's happening right now in the world is a super scary from the point of view of the legitimacy of government issued money, and what's going to happen over the next 20 or 30 years is really going to shape that out, and a lot of that is caused by what's happening today. So I think that decentralized stablecoins represent a very important aspect of that, and things like what Xiaolong is doing in Bidao, it sort of adds one step further to this. It allows you to take assets that already exist on Ledger and repurpose them to create stable value. It allows you to take positions that you can cash out some of your position, but still maintain exposure to it, and also opens up a whole new raft of ways in which you can access decentralized finance. And I think that people don't really appreciate quite how important stable coins are to being able to do things like create liquidity pools and Uniswap, and doing things like being able to do synthetics, and later on, as options become bigger, which they will in the next couple of years, options and derivatives are probably the most exciting for me areas of DeFi in the future. This ability to create stable value settlement that you can trust the value of, isn't necessarily linked directly to a government issued currency, but allows the ecosystem to interact with each other. I think these are continue to be an unsolved important area of innovation that just needs to continue.
Yeah, the growth is very very fast currently. I've seen like USDT is around $14 billion right now. So I think it's a very good thing. And yeah, I'm excited about other projects, stablecoin projects too. So look forward to see when you guys go live at Bidao as well, seeing how much adoption you get. Long, do you have also a topic outside of the scope of your own project that, you know, within DeFi you are very excited about?
Well, in DeFi, and so far I'm working on the stablecoin, so just very interested in those. But you know, for the stablecoin, for any stablecoin, there are so many stablecoins. So there's a one key for that one is the liquidity. So I'm interested in this too, because for any stablecoin, you need your people to use your stablecoin to trade and to use it for as a consumer perspective. For example, you need adoption. So firstly, how to get the liquidity, how to get the volume, how to get the users, that's a big topic. And that's a key thing for you to grab a share of the market. So I think for that one, we can borrow some ideas from some recent innovations like the liquidity mining or liquidity. We may think about some liquidity rewards programs, but in the meantime, we should also pay attention and be careful about those kind of new schemes, because sometimes they just create the hype, but it's maybe it's not quite so sustainable. So we need to carefully design or come up with some more careful ideas, like how to achieve a more organic growth and sustainable growth for your platform, for your liquidity, for your stable coin. That's another topic I'm very interested in. Yeah.
Very cool. So there is something I'm also very interested in. So you guys mentioned the you know, issue with hacks and hype and all that sort of problem. And you know, I don't think that's something that's going to go away. You know, we've seen this bubble happening with the ICO in 2017, and now we have another bubble with DeFi, and this every time this comes with a lot of, you know, issues, whether it's like scams or hacks or any sort of problem. And it seems like now what's coming up as a, you know, additional solution is insurance services, on-chain insurance services. Are you what do you think about that?
So I think it's necessary. So what we're talking about here is there's sort of two principal components to insurance: sort of systemic risk and idiosyncratic risk, right? Like, so idiosyncratic risk is project specific. Like, did you build a bug into this application, and did this bug therefore cause loss for the user? And then so systemic risk is like, is there a fundamental problem with Ethereum, and has that problem therefore caused loss to the user? I think that systemic, both are sort of very high in the ecosystem right now, and insurance is a good way of starting to fix some of these problems, but it doesn't remove the fact that bugs happen and hacks happen. All it does is it means that it mitigates some of the loss that occurs when that happens. But you know, when you have bugs and hacks, it can also often kill the project entirely because of the loss of faith in that project. And while the users may end up sort of recovering some, if not all, of their principal, you still end up with the situation where the entire ecosystem is sort of less trusted. So there's a difficult balance to strike. Insurance is really important, and it should continue to exist and get more clever and more integrated, and we're working on all sorts of ways of baking insurance directly into how you build DeFi on Radix, as well as baking security in how you build DeFi on Radix. But I don't think it's a cure-all. Like if you know there is a bug in, like, in, let's take Yam.finance, right? Like Yam.finance, people didn't lose $650 million, but $650 million flowed out of the platform after a day because of a bug in the code. And you know, they're now relaunching again, and that's going to be really interesting to watch. But a lot of these experiments are fundamentally experiments with money. And so I think that there's several layers to this. The first is, like, we have Solidity and we have the Ethereum ecosystem, and we do have, and like as a result, the way that you build is sort of very difficult to make secure in Solidity. It's very difficult to make to create good secure execution in the Solidity VM. So what we're going to do is we're going to introduce insurance. So that's fine, but that means that the premiums are going to be pretty high as a comparison of what you're actually covering. And it doesn't get rid of all of these, you know, problems of reputational and project damage. The thing that Radix is building and really focusing on is how can you first of all improve the underlying way in which you build things like DeFi to reduce the likelihood of hacks, to reduce the likelihood of bugs, and then on top of that, how can you still make sure that insurance is a really important part of it? Because I think that insurance fundamentally is just a sign of a maturing ecosystem.
Yes, I think that the insurances can also be an additional way to also, you know, make users more confident about the product they use, as any insurance company would only insure if the code meets some certain standards, right? So it's an additional layer of quality vetting, essentially, right? But yeah, for sure, I agree. It will not stop project from being hacked and, you know, then losing all the legitimacy they had and so on. But at least, yeah, investors and farmers and yield farmers get a little bit more safety, which is a good sign, I think. I think we have to close the session now because it's been half an hour already. Thank you guys for your time. Thank you everyone for joining us today. And
so much. Yes, exactly. Thank you so much for staying with us. Time is up for this session. We have another session right after this one. So thank you so much to the three speakers and the audience. And let's go for the next one. Just go to the next session.
Thank you for having us.